How much house can you really afford in 2025? You think you can afford a $700,000 home? Well, you might want to do the math once again and check the numbers carefully. Now, 2025 has been a year where we quite honestly thought that mortgage rates would be a lot lower than what they are now. We've been hovering in that 7% range where we thought we would maybe even be in the fives. Now, insurance has also been one of those crazy things where we just don't quite know where insurance is going to land on the pricing. So 2025, you got to pay attention. Let's break it down. It's not about how much you want to spend, but it's about how much you should spend, especially with all of these hidden costs that most buyers just truly forget about. Rates are not what they were in 2021. Now, even a 1% increase in interest rates can change the entire payment scope. Now, you'll want to ask your lender to include the real actual monthly payment. Now that is principal, interest, taxes, insurance, and any HOA that's applicable. Lenders like me always go to looking at a borrower's debt to income ratio. Now, debt to income ratio is what you pay monthly versus the income that you bring in. So a really easy example is if you have $4,500 going out and you make $10,000 per month, that's a 45% debt to income ratio. Now that is right on the edge of being approved or not being approved eligible. Some loan programs can go higher, but you get the idea. That limits you to what you qualify for and what's actually smart to take on. In California, we are seeing a huge increase when it comes to monthly premiums. And in some cases, we are seeing it's very hard to even find insurance in general. And with those rising costs of insurance and maintenance costs of repairs, especially with older homes, you are going to impact your budget very, very quickly. Cash reserves are going to be something that you really want to pay attention to. Do not use all of your cash funds to go directly towards your housing payment because you really want to have enough for an emergency in case something happens. Draining your bank account just to afford your home payment, that is truly being house poor. Real quick example is we had a client that is coming in to look for a $900,000 home. Now on paper, we could qualify them for that $900,000 home, but after we looked at the true payment where we had principal, interest, taxes, and insurance plus the HOA, it was really more appropriate that they look at that $750,000 home. And that $750,000 home was truly more in their budget, and it still was a nice home. If you want to know how much you can afford in 2025, do not guess. Get with a mortgage professional, someone like me that's been doing this for 20 plus years, and really go through your budget and really look at the full housing payment. Now remember, it is principal, interest, taxes, insurance, any HOA, and make sure you shop for that really good insurance policy that covers you at still a very competitive price.